Markets are moving fast as traders react to a string of economic indicators from both Australia and the United States. With the RBA decision looming and Wall Street rallying, what does it all mean for investors? Well, joining us today is Rodda from Capital.com. Good to see you. Could strong labour market data delay or derail a potential RBA rate cut next week? People are on the edge of their seats.
Yeah, there is a strong argument that the RBA shouldn't be cutting interest rates in this circumstance, just on the basis that, if they have two jobs to do, which is to make sure that they have maximum employment as well as stable prices, well, they've got maximum employment and, arguably prices have only just come back into the 2 to 3% target band. And therefore, they're not really ticking that box yet either. But if you do look at market pricing, you effectively have a 96% implied probability baked into the market that the RBA will cut next week. There hasn't been much or actually any pushback over the last few weeks as the markets have priced that in from RBA commentators, or I should say speakers from the RBA, suggesting that they're basically ready to cut rates. And, it would be consistent with the rate cut that we saw in February. Effectively, inflation is trending towards target. The RBA has signalled that it's willing to move preemptively to try and, lower interest rates as inflation continues to move back towards the 2 to 3% target band. And of course, we're dealing with a more global, a more uncertain global economic backdrop that means that we might require a little bit of support there for the economy. So it looks like it will cut, although there will be some debate as to whether they should or not in the coming days.
Yeah, it'll be interesting to keep an eye on. How is market sentiment shifting now that trade risks are easing? I feel like we've come out of that initial slump where Trump made those moves on the tariffs. Things are crawling back to a stable level.
Yeah, certainly. Really, if you look at the developments of the last week, it's the kind of backflip 180-degree move, really, from the Trump administration towards tariffs that has allowed for this recovery in global equity markets and especially US stocks, which were really getting beaten up because of the Trump administration's trade policy. There is still risks on the horizon, mostly on the basis that these pauses in tariffs are just that at the moment. They're not, actual crystallized trade deals. There is still hope that, there's going to be more trade deals with other trading partners. The very many number of trading partners that haven't struck a deal with the Trump administration are still exposed to relatively high tariffs. But as far as the markets are concerned, this is just the beginning of a process where tariffs will be dropped. Likely they'll be much higher than they were before Trump came to office, maybe somewhere in the low double digits in terms of the average tariff across the US economy. But that's still significantly lower than what we were looking at a few weeks ago when the Trump administration announced its Liberation Day tariffs. And therefore investors are sort of pricing in that this will be a probably unnecessary but fairly short and shallow slowdown for the economy, and that tariffs will be eventually a nuisance, but largely a thing of the past.
Yeah, it's interesting stuff. So US inflation data, I understand, came in a bit softer. How is that fueling hopes of federal rate cuts? What are we seeing there if we turn our attention to the US?
Yeah, so we have had some data this week that has more or less suggested that, despite the potential risks of higher prices, or at least a bit of a price shock coming through from tariffs, that's not materializing at least yet. And that disinflation, so the process of inflation coming down, is still underway in the States. So we had some CPI data that was a little bit softer than expected this week, some producer price data, which actually suggested prices were declining, basically for businesses. So it all kind of is adding to the weight behind this move in equities at the moment, really on the basis that with tariff uncertainty potentially taken off the table and the inflationary risk that comes with it, that we're still seeing signs that inflation is moving back to target in the United States, and therefore we'll be able to get some rate cuts. At some point this year, the markets are pricing in the first rate cut around September or so from the Fed, and that's sort of supporting market sentiment as well. So overall, the big factor this week has been those trade deals, but the data has also been behaving overall and suggesting that the economy is actually an okay position for now, given all of the turmoil of the last couple of months.
Yeah, now's not the time to go and panic and throw out the baby with the bathwater, but we've seen a bounce in the US stocks. What is behind the reversal of the Sell America trade we're hearing about at the moment?
Well, effectively, what happened during the or after the Liberation Day tariffs was two things. The markets were pricing in a weaker global economy. Sorry, I should say a weak US economy specifically, a global economy as well, but the weakness was going to start in the United States. And there was also this crisis of confidence emerging in US assets because all of a sudden the US was seen as being a little less credible as before, in fact, potentially much less credible before. And that was really threatening the US's role as at the center of the global trade system, the global financial system as well. So since we've seen the Trump administration backing off these tariffs, not only has it improved the economic outlook for the US economy, but it's also restored some of the confidence in US assets in particular. And so all of this money has gone and flowed back into US assets, including stocks, which had, of course, exited it during that period of uncertainty related to trade. So as a result, we've got US tech stocks really roaring again. People are getting excited once more about the artificial intelligence trade. All of these things are sort of, bringing markets back to the US markets, US assets, and it's the reason why we've seen, Wall Street outperform global equities, despite, of course, trade policy being a global factor.
Yeah, and absolutely an ongoing issue. But Kyle, I want to thank you for joining us on the program today. Look forward to speaking again, whenever that is. Thanks again.
Thank you.